What's up to you all accounting buffins? My name is AB and I'm here to learn more and learn extra on an accounting lesson with Mr. Ashraf. How are you, sir?
Good, AB, and you?
I'm good. I'm feeling so excited. It's been a while not seeing you.
It has been. So we've been busy, eh?
Busy working,
That's
hey?
the one.
That's the only way. My
Yes.
teachers, remember, there's no more time for you guys. There's matrix. So you have to work each and every time that you get, use it wisely. What are we doing today?
AB, in today's lesson, we're focusing on what we call inventory valuations. In other words, we're looking at what we're saying is there are different methods of inventory valuation. And you will see as we get into the lesson, we will explain when we talk about stock systems and about stock valuation. So
Awesome.
the emphasis is on stock.
Awesome. The emphasis is on stock. Remember, mindsetters, you can still send us your questions. Already, there's some mindsetters that are sending us questions on facebook.com/learnextra. Do the same because we are here to help you. And Mr. Ashraf is going to be answering those questions later on. You'll never be a fool by asking a question. Remember that. But now, there's an awesome giveaway for you guys. We have this Casio calculator, proudly sponsored by Casio. All you need to do is to do the test yourself questions. The link is on Facebook. I've posted it already. So you do the questions. Should you get all the questions right, you'll be winning this awesome prize. You have up until 4 p.m. tomorrow to enter for the competition. Lastly, follow us on Twitter @LearnExtra and let's keep the conversations coming.
Thanks, AB.
Thanks, sir.
Okay, so guys, when we look at inventory valuation, like I alluded to earlier on, one, we look at stock valuation, right? And we also talk about the calculations that we have to do for stock valuation. But before we do that, what is important is to look at our challenge question. What is our challenge question? The challenge question says, name 3 methods of stock valuation. Okay? Keep that in mind. Name 3 methods of stock valuation. We're going to come back to this one, AB, when we discuss our challenge question. Right, now into our lesson. Firstly, when we talk about a stock system, what are we referring to? We are referring to the 2 that you are generally au fait with. One is what we refer to as the periodic system, right? And an example of a periodic system would be your corner cafe that does not have a fully functional computer system linked to the cash register. And your perpetual system, whereby, remember, perpetual means continuous, and it tells you that you will see now when we discuss each of these systems, what are their advantages, what are their disadvantages, and how do we operate such a system? In other words, what is important is that you need to know both these systems as they can appear in your exam papers, in your assessments, in the work that you are doing in class. Now, what is the perpetual system all about? Remember, from grade 10, you were using the perpetual system. In other words, you were recording the cost of sales after every sale. In other words, every time you had a sale of goods, you were recording the double entry for the sale, right? So if it was a cash sale, you were debiting bank and crediting sales, but at the same time, you were recording the cost of sale. Remember, a debit to cost of sales and a credit to trading stock. In other words, every time there's a sale, we also record the cost of sale. So that deals with the perpetual inventory system. So one of the main characteristics of the system is the fact that every time we have a sale, the cost price is being recorded. Now the periodic system. Obviously, your periodic system, by virtue of its name, tells you that you will only work out the cost of sales at the end of the period. That is why it is called periodical. Okay? And obviously you use a certain formula to do that calculation. And surely you know what I'm talking about. I'm talking about the fact that we have to take our opening stock plus our purchases plus our adjustments on purchases in order to calculate the cost of sales. Now, let us look at the advantages of the perpetual stock system. The advantages of your perpetual stock system is as follows. One, you always know exactly how much stock you have on hand. In other words, if you need to know what stock do I have on hand, you refer to your trading stock account, and that balance indicates to you the value of stock that you have on hand. Stock losses are easier to detect using the perpetual system rather than the periodic system. At any one time, you can determine whether there has been a trading stock deficit or not. It is more accurate and realistic as your cost of sale is recorded every single day with every single transaction. Now, obviously, what we also know is that, unfortunately, one of the drawbacks, one of the disadvantages of the perpetual system is that it is expensive to operate. Why? Think about it. If you are operating a perpetual system, you need to have a fully functional IT system behind that to give you the support and the backup. Every time goods are bought, you have to scan these goods. So you need barcodes, you need a scanner, etc., etc., etc. So you can see that one of the disadvantages is that it is expensive. Look at your periodic on the other hand. When it comes to periodic stock, what do we know? It's much cheaper and easier to implement as compared to the perpetual system. Why? You don't need any of the fancy equipment. It's a simple system. In fact, if you look at some of your school tuck shops, they are run on a periodic system whereby they just sell the goods, and periodically stock is taken in order to determine your cost of sales and obviously your gross profit. So you don't need a barcode, scanners, you don't need to record the cost of sales after every transaction. Obviously, like we said earlier, periodic, indicating to you that you work within a certain period and then you determine what you need to determine. Okay, next. So those were stock systems. Accounting boffins, those were stock systems, perpetual and periodic. We move on. When it comes to determining stock value, now you ask yourself, which method of stock valuation are we going to use in order to determine the cost price of the stock at the end of your financial period, that's your stock on hand at the end of the year? Again, the wisest choice would be that method which can facilitate the most realistic determination of profits for any specific business. Okay, sounds a mouthful. Basically what it has mean, depending on the needs of the enterprise, depending on your needs, what do you want? How do you want to calculate the value of your stock will tell you the method of stock valuation. Okay, they talk about 4 methods. In terms of grade 12 curriculum, you are expected to know 3. Number 1, specific identification method. Now, definitely I'm going to do an explanation on it, but it's supposedly new in terms of the CAPS requirements, and I'm sure you've heard from your educators at length about CAPS and the first time that you are writing a CAPS exam, so bear with us. Make sure you have the accounting cap on now, because that's what it's all about, AB.
So
the
true.
Accounting cap, eh?
Do not fear anything when Ashraf is around.
Thank you, AB. Okay, guys, so your specific identification method is one method. The second method of stock valuation, also referred to as stock validation, is my weighted average method. And thirdly, what we refer to as first in, first out, also known as Fifo. Now, this one here, specific identification method, what does it really mean? If you have 3 vehicles parked here, vehicle A, vehicle B, and vehicle C. You can specifically identify each of those assets, and you can attach a cost price given to you for vehicle A, for vehicle B, and for vehicle C. The cost may be given to you in rands and cents, or it may be given to you in the form of a barcode, where you use a code representing a figure, and that's how you would determine the cost price of those assets. So this is nothing new to you. You've been there, done that. You've seen this before. You may have even done it in grade 8 or 9 when you did EMS at school. So what are we saying? In addition to FIFO and weighted average, methods of valuation of stock, CAP stipulates the specific identification method. Again, like I said, this should not create any problems. Why? You've been working with this method all along. So if you are given a method and you are told that in terms of your stock valuation, it was done by means of specific identification, what it basically means is you took each item of stock, identified its cost, and recorded it. That's what it means. Simple, right? Okay. Weighted average. Obviously, this is new to you. By weighted average, we will take into consideration, one, the quantities of stock, right? That means the number of items that you have bought. And you will also take into account the value. So what we are saying is that when these goods are receipted, the average cost of each item is recalculated or calculated at the end of your financial year. In other words, you will see when we go into the actual question, and you will see how we go about doing a question on the weighted average. Basically what it means, if we have to look at an example of it, basically it means as following, that if you bought 100 items at 5 Rand, and then you bought 200 items at 10 Rand, okay? What are you going to do? You're going to add the values. That means you're going to add 200 plus 100, which will give you 300. And now watch, 105 is equal to 500. And 200 times 10 is equal to 2,000. Right? Once you have that, you add your 2,500. Watch, this is a very basic and simplistic explanation of weighted average. In other words, you take the total value of the goods, which is 2,500, divide it by the 2,500 divided by 300. This will then give me an average of 8 Rand and 33 cents. So you've worked out an average of 8 Rand and 33 cents as the weighted average. Now watch what I took into consideration. I took my values, that means the quantities, I multiplied them by the unit value of each one to give me the Rand value. So this is your Rand value of those units. You then divide to find a weighted average. So in other words, what we are saying is that that is what we refer to as the weighted average. Now when it comes to the next one, which is called FIFO. Maybe, would you say FIFO or FIFO?
Most people say Fifo.
FIFO, FIFO, who cares? As long as you understand,
As long as you understand the method.
what it means, exactly. Right? So your pronunciation is not important. What is important is the understanding behind FIFO. What does FIFO really mean? Your sale of goods is based on the first in, first out principle. What's the basis? It means that goods bought first are the ones that will be issued for sale first. I repeat that, important. Goods that are bought first are the goods that are issued for sale first. In other words, first in, first out. Now, the secret behind FIFO, listen carefully. The secret behind FIFO is when you are doing your calculation to work bottom up. Listen carefully. I'm not saying bottoms up, Amy. I'm saying
I'm
bottom,
listening.
bottom up. So in other words, you work from the bottom of the table in order to do your calculations. Now I'm sure I've piqued your interest. So if you want to know more, the place to be is Learn Extra Live.
So true. And in the meantime, you have the challenge question posted on Facebook. Name the 3.
Methods of stock valuation.
Exactly. It's on the page, man. It's facebook.com/learn extra. And you still have a chance to answer for the Casio calculator. But for more information, we'll tell you after this break. Welcome back, accounting buffins. Now, if you just joined us now, you're a bit late, but I'm sure you can still catch up because the A-Squared team is in the building to help you. So relax, fasten your seatbelt because you're about to learn more and learn extra. Talking about the competition that we're having, which is a giveaway of this Casio calculator, Mr. Ashraf is going to tell us a bit of an advice for the mindsetters.
Yes, certainly, Avi. Watch this here. Guys, I want you to develop a relationship with your calculator. What do I mean by that? Take the calculator that you use every day in your classroom. Make sure that that calculator is the one that you use in the exams. Why is that, Abi? Because you know exactly where your digits are. You know where to calculate your percentage signs. Now come exam time, and on the morning of the exam, you're in a panic, firstly because it's the exam. Now you take a calculator from somebody else. You don't know the functions of that calculator. You don't know exactly where the digits are because on your calculator, you know exactly, you can work with closed eyes.
So true.
So my advice to you is that develop a relationship with your calculator. Know exactly, this is how my calculator works. These are my shortcuts, etc. And then when you walk into an exam room, make sure that the calculator is functioning 100%. Why? Because you don't want to be caught out with using a calculator where you're looking for things. Do you know what I'm saying? So that's the secret. Walk in with a calculator that you have developed a relationship with.
I love that. As much as you know your cell phone by head, you should be knowing your calculator.
Absolutely.
And this Casio calculator is very simple because it has about 254 functions. So on any other Casio calculator, you still get the same functions. So that's the nice part of using a Casio calculator.
Absolutely.
Awesome, sir.
Okay.
Thank you.
Right.
Let's move on. Yes.
Okay. We move on to our question now. And it says that you are provided with information in respect of Magic Soccer Balls shop, right? For the period ended February 2009. The business is owned by Peter Pule. The business uses now, once again, what is very important is for you to see that we always talk about this. Maybe you remember this one? Read the
Full.
full question. We won't swear or use an expletive, right?
No.
There's no need to do
I
that.
see you've underlined the F
Yes. Okay. So they use the perpetual inventory system and the FIFO method of valuing stock. Now, clearly you can see from our lesson that we spoke about the stock system and the stock valuation. The stock system, grade 12 accounting stars, yes, is the perpetual inventory system, whereas your stock valuation is FIFO. Okay, got that. Right, let's go. Number one, the question says, explain the meaning of the term FIFO. What does it mean? It means that, stated another way, the oldest stock that you have is sold first. In other words, if it came in first, it is sold first. Therefore, another way of expressing this is to say that the oldest stock is sold first. So, get rid of the old stock first. What are we doing here? We are explaining to you what FIFO actually means. For example, if you have opening stock of a certain item, soccer balls for that matter, then you would assume that your opening stock would be the stock that would be sold first, because that's the stock that you had on hand. So therefore, the oldest stock of soccer balls is what we have sold first. First in, first out. Right. With regards to our question, we are told that the selling price of soccer balls was kept constant throughout the year. Calculate the selling price per soccer ball. That means, what was the price of one soccer ball, the selling price? Let's look at our information. We are told here that the sales of soccer balls was 430,500. That was the value, the selling price in terms of the value. We also know that we sold 2,100 soccer balls. So, what did you sell one soccer ball for? What are we going to do? Very simple. We're going to take our Casios and we're going to say 430,500. 430,500. That's wrong. 430,500. Right? That was the value. How many soccer balls did we sell? We sold 2,100. Divided by 2,100, and the value of your soccer ball sold would be 205 Rand. So in other words, the value of the selling price per soccer ball was 205 Rand. What did we do? We took the value, the total value, divided by the number that we sold. Right. We are now asked to calculate the number of balls that are missing. Right? Okay, very simple. Let's go back to my information. Let's go back to my information. And I find that I have here my opening stock of soccer balls is an amount of 750. Okay? So I started off with 750 soccer balls, which was my opening stock. Therefore, 750 would be the number of soccer balls at the beginning of the financial year. Then, how many soccer balls did I buy? If I look at my purchases column, I can clearly see that I bought 2,480. That one. 2,480. In other words, 2,480 is the purchases of soccer balls. Right. Next, what do I need? I am told that I have left over a total of 1,100 soccer balls. Okay, now, if I take my 750 soccer balls that I had at the beginning of the year, plus the 2,480 that I purchased, minus the 2,100 that I have left over, gives me a figure of 1,130. Right. What is the 1,130? The number of soccer balls that I'm supposed to have left over. Now, if I look at the question, I can see that I only have a closing stock of 1,100. Clearly you can see from this question here, clearly you can see that I only have 1,100 on hand. This means that 30 soccer balls were stolen. Let's go through it one more time. Number one, you take the value of, or the number of soccer balls at the beginning of the year, 750, right? You add what you bought, the 2,480, right? You then subtract what you sold to tell you what is supposed to be left over. And we found out that in terms of that calculation, we had 1,130. We were supposed to have 1,130, but we only have 1,100. Therefore, 30 balls are missing. So please follow that method in order to determine the number of soccer balls that are stolen. Coming back to my question, what entry would you make in the books to record this year? Obviously, once you have identified that the soccer balls were stolen, you now need to make an accounting entry. And the accounting entry is as follows. Let's find where we're going to make the entry. We got that one. We've worked it out already. Right. What entry would you make in the books to record this? Understand that we have lost stock. Okay? So therefore, you're going to debit an expense account. You can call it stock theft or whatever you want to call it. It's not important as long as you realize that you are debiting an expense account. So you're debiting stock theft and you're crediting your purchases account if it was periodic, right? In our case, because it's perpetual, we will credit our trading stock account. Now you will notice that I've given you two alternates here. Because if we're using the periodic method, we do not have a trading stock account. Therefore, it would be purchases if it is periodic, but relevant to our question, because it is perpetual, we will enter it into our trading stock account. Once again, the double entry. A debit to stock deficit, stock theft, stock stolen, whatever you want to call it, as long as you realize that you have an expense account, and that is important. So debit the expense, credit your asset account, namely trading stock, because we are using the perpetual method. Right. The next question says, value the stock on hand at the end of the year according to the Fifo method of stock valuation. All right. Now, very, very, very important. What was the secret that I whispered to you regarding Fifo? I said, bottom up. I said, bottom up. Watch this here. In other words, if you're looking at your purchases now, your emphasis is on this one here. Watch. That is where my emphasis is. And you start at the bottom of your table. Why? Because you're using the Fifo method, meaning what? The oldest stock is sold first. In other words, you are left with what? With the stock at the end of the year. So in other words, there's 480 units giving me a value of 76,800. So here, what we can say is that 76,800, and if we check the number of units there was 480, so therefore this is represented by 480 units. But now remember something else. You are working with 1,100. You need to cater for your stock at the end of the year is 1,100 units. Okay? So you've already dealt with this 480. It's taken care of. All of this is what you got left over. But it's not enough to cater for my closing stock. So I go bottom up. I move up in my table. Now what do I look at? I say, fine, take my 1,100 minus the 480, and that gives me a figure of 620. Now, which 620 do I have? It's 620 of these units here that were purchased on the 25th of October. Keep that in mind. So 620 times 120, which will give me a value of 74,400. Okay? So 74,400 would be the value there, represented by 620 units. Watch what I've done. If I add this figure here, it gives me a figure of 1,100, which is the stock that I have left over at the end of the financial year. The value of that stock would be plus 76,800, and that gives me a figure of 151,200. 151,200. There's the value of my stock using my Fifo method of stock valuation. So the secret, grade 12s, is bottom up when you are working out the value of your stock using the Fifo method. Right, let's take a look at the next question. The next question says, calculate the following: the cost of sales. Okay, now if you want to calculate the cost of sales, what do we know about cost of sales? We know that when we are working out with cost of sales, we got to take a calculation into account depending on the information that is provided. Now, going back to my table, what do I know? I know that my opening stock is valued at 82,500. So immediately we say 82,500 is my opening stock. Right? Number two, add my stock that I bought. What was the value of stock that I purchased? The value of my purchases was 340,800. So therefore, 340,800 would be the value of my purchases. Now be careful. You will notice in this question here, no mention is made of expenses on purchases. Why? Because we are using the perpetual method. But if you are using periodic, then you also have to bring into account items like carriage on purchases, import duties, and any other expense that you incur in bringing your goods to your point of sale. So any other expenses that you incur on purchases must be brought into account as well. Right, now be careful. In this figure of 340,800, you would find that certain amount of stock was stolen. Can you remember? It was the 30 items and they were valued at 110 Rand. So therefore, if you take your 30 items times 110, it will give you a figure of 3,300. So you're going to subtract the 3,300. Can you see? Now, obviously, if you recall your entry, what was my double entry? A debit to my stock deficit and a credit to trading stock. So you can see that you are subtracting your trading stock deficit. So in other words, you've got your opening stock plus your purchases minus the stock that was stolen and minus your closing stock, which was 151,200. Okay, now, obviously, if you take all of this here, 82,500, 82,500 plus 340,800 minus 3,300 and minus 151,200, this will then give you a figure of 268,800, and this is now your cost of sales. Okay, so please look at the method in which we work. Once your method is organized, I promise you, you'll never find a difficulty. But you want to know more? Place to be, maybe,
is right here.
Right here with
and
us.
Just a reminder to the Mindsetters, their final timetable is out and the June timetable is out. So they're writing their accounting on the 14th of May.
Aha.
So it's soon. So just few, maybe you've got one week, but next week we're going to be having a revision. So stay tuned because we're going to be learning more and learn extra. But for now, don't go anywhere. We'll be back right after this break. Welcome back, Mindsetters. Now, if you just joined us now, you're a bit late, but I'm sure you can still catch up because Ashraf is taking it bit by bit.
That's it.
And you have the challenge question to answer, so you don't really have much time. I've seen so many answers from you guys, and we're going to check them if they're correct.
Okay, dokies. Any other questions that we have there?
Yes, we have one question.
Right.
Should I give you now?
Yes, it's fine.
Okay. Question is from Tando. How do we calculate the rate of depreciation in accounting?
Okay, Thando, obviously not related to this section here, but when you want to calculate your rate of depreciation, let me just use a bit of space here to explain that to you. Let me go to the bottom here. Very simple. What it means is as follows. Generally, when you are calculating depreciation, what do? You take your amount of your depreciation. So if you are calculating depreciation on 100,000, right, times your rate, that means your rate of depreciation, we're assuming it's 10%, okay? I'm showing you how we're going to get to your answer, times your time. So you are calculating depreciation for 12 months of the year, so 12 over 12. So in other words, your question is, how do we calculate the rate? Obviously, if we're calculating this part of the depreciation here, your amount, your answer here would be 10,000 Rand. Why? You took 10% of 100,000 for the entire year, giving you a figure of 10,000 Rand. Now remember, if you are expected to calculate the rate, then this would be your unknown. In your equation, the rate would be your unknown, but the answer would be given to you, and therefore you would basically just solve the x to find out the rate of depreciation. Okay? So important, remember, whenever you are dealing with depreciation, to use art. And I'm not expecting you to draw your accounting teacher, but what I expect you to do is to understand that amount, rate, and time. So if you take those three components, and if any one of them is a missing component, like the question that you have asked, where the rate was a missing component, you just make that the x, and you then solve for x. Very, very simple.
I love your acronyms.
Thank you very much. Okay, dokes, are we done with that one?
Yes.
Any other questions?
For now, I think we can move on.
Okay, can we move on? Okay, perfect. Remember what we said, just to recap, when we worked out our cost of sales, we took our opening stock, right, which was the 82,500. We added our purchases, right? We subtracted the stock that was stolen. Now, very, very important. I think it needs to be mentioned. Watch. The owner, Peter Pule, is aware that some of the soccer balls were stolen from the storeroom in April. You know specifically that this stock was stolen in April. Now, important for you to note is that the only stock that you had available in April was this stock here, which was part of your opening stock. Do you see that? Because the other stock was purchased in May. So the only stock that could have been stolen was part of this opening stock, and therefore my calculation would be 30 balls that were stolen. Remember, we did the calculation times 110 Rand. So you need to be specific which stock was stolen, right? And the stock that was stolen was the stock that we had, which was part of our opening stock, and therefore, you will notice in our calculation we said 30 times 110 to give me the value of 3,300, which was the value of the stock that was stolen. And remember, you saw in my calculation, I subtracted that amount because obviously those soccer balls were stolen. Now, just to lead you on to something else. Very often, you would find that a question that says, it was suspected that stock was stolen. You didn't identify it. You just assumed, yes, there may be stock stolen. But the only time you make the entry is when you actually identify and you are aware that stock has been stolen, and therefore the entry that we put through. Okay, now moving on with our question. We calculated the cost of sales. We now expected to calculate the gross profit for the year. Remember, when it comes to your gross profit, what do? It's your sales minus your cost of sales. And obviously, we have worked out the one figure we worked out, that was the cost of sales, that was 268,800. 268,800. Remember, our sales figure is given to us in our table, and our sales figure was 430,500. Therefore, 430,500 minus 268,800. Let's take out our Casios, and here we have 430,500 minus 268,800. And my answer is 161,700, and that would be my gross profit, my GP. Now, let's just take this one step further. Obviously, this is relevant to this question here. If you are told to calculate your percentage markup that you are applying, then obviously you need to use the financial indicator to be able to do that. And one more important part, when you are calculating your cost of sales, remember in this method here, because it was perpetual, you could take information that was given to you, like I alluded to earlier on. Also be aware that we sometimes use the periodic system. And with your periodic system, you do recall that there are certain adjustments that you have to put through in order to calculate your cost of sales, right? And what are those adjustments? Just to bring them to your attention, remember the calculation of cost of sales when we are using periodic system is as follows: opening stock, right? Then you add your purchases. Now remember, this purchases figure here would be in brackets with calculations. Why? You're going to subtract your creditors' allowances. You're going to subtract any donations, any drawings that you may have had. So purchases would be subjected to certain other additional adjustments. Right. To it we would add what? Our expenses. Which expenses? Our expenses on purchases. Like what? Carriage on purchases, import duties, customs duties. All these are expenses that increase the cost price of my item that I have purchased, which I'm going to resell. So keep that in mind. Examples of these would be import duties, etc. I'm just going to list one of them just so that you can recall and remember that that's just one expense. At the same time, let me just take it one step further. Sometimes you find examiners wanting to test your knowledge, and they give you an item called carriage on sales. Now grade 12s, that's what we call a red herring, to lead you astray. And you're not going to be led astray, because what did we say? Don't fear when Ashraf is near. So be careful of carriage on sales. Why? Because carriage on sales has absolutely nothing to do with purchases. It's a normal delivery expense which you would transfer to your profit and loss account. So be mindful of that. Watch out for that. Carriage on sales does not impact on my calculation in any way. So remember, once again, opening stock plus purchases, and calculations please for purchases. Show your calculations. Why? You will notice from all your exam papers that whenever a calculation is given to you, and you are expected to do that calculation, you get part marks for your calculations. Right, obviously, add your expenses on purchases and less your closing stock. So keep this in mind. Okay, moving back to our question. Peter is not sure when to place his next order of soccer balls. How long can he expect the closing stock to last? Provide figures or a calculation to support your answer. Right, back to my table. I can see that I'm selling 2,100 soccer balls for the year. In other words, if I do this year now, and I say 2,100 soccer balls per annum, divide by 12, will tell me that on average I'm selling 175 soccer balls a month. Okay? So, and if I have closing stock valued at, remember, my closing stock was valued at 151,200. So therefore, if I take my 151,200 divided by 175, there's something that I'm doing wrong here. Let me just redo that one. We're saying that we want to know how long will the soccer balls last us. So if you take your 151,200, which is my closing stock of soccer balls, right? And that soccer balls will last you an average of, that's the value of your soccer balls, right? The rand value. The number of soccer balls that we had on stock, let's look at our table to get the number of soccer balls was 1,100. That, remember, the 151,200 was the value, and this is the number, the units. So take your 1,100 divided by 175, and you will see it will last you plus minus 6.28, 6.3 months. That's how long you expect your soccer balls to last you. Okay, I think we're into the last question. And the last question says, what advice will you offer Peter about his purchases of stock? The advice is very simple. Do not order too much stock, because when you order a lot of stock, you're opening yourself up to other possible expenses, like what? Storage, theft of stock, insurance costs, etc. So order when you need, and in this way you will then be able to sell. Right, coming back to our challenge question. What was our challenge question? Name 3 methods of stock valuation. Very simple, guys. Number 1, Fifo. First in, first out. Number 2, weighted average. Right? And number 3, specific identification method. I'm sure we got a lot of boffins.
So many of them got it right.
Well done, guys. Now remember, just by way of explanation, there is another method, but it's not examinable, so don't worry about it. What you have to do is to make sure that you prepare thoroughly and you work towards preparing for all your exams. Because you know, what does Ashraf say? If you aim for the moon, and perchance, if you don't get there, you're definitely going to be an accounting shining star. Keep practicing and keep on shining. Cheers.
Well said. Then I don't need to close the show because already you've wrapped everything. But thank you so much, Mindsetters, for tuning in. We love you and keep on learning more and learn extra. Peace.